LVMH. Is this luxury conglomerate stock currently at a reasonable price? Hello, and welcome to my YouTube channel, where I do fundamental analysis of various companies. Before I start, I want to let you know this video is only for educational purposes and should not be considered as financial advice. Thanks. Introduction. French fashion conglomerate with a market cap of 336.8 billion, operating in the luxury apparel business. I want to analyze this company as I believe this business, as LVMH, is perhaps the most famous luxury business across the globe, with brands like Louis Vuitton, Hennessy, Dyer, and Marc Jacobs in its portfolio. LVMH consists of 75 brands, called Maisons, controlled by Bernard Arnault's conglomerate. These brands earned close to 80 billion euros, $88 billion, in revenues, with 68% gross margins and 18% net profit margins in FY22. Fundamental analysis. Income statement. Consistent increase in yearly revenue. Annual revenue in 2013, 29.15 billion euro, and in 2022, 79.18 billion euro. That is 2.7 times increase in the space of 10 years. Gross profit has also been increasing consistent with the revenue. 2022, 19.09 billion euro, this 54.02 billion in 2022. Highly profitable business with gross margins consistently between 64 to 68%. After the cost of the goods, day-to-day running of the business, and paying income tax, the company has recorded net income of 14.08 billion euro in 2022. This has increased massively from 3 billion in 2013. This gives the company a highly profitable net margin range between 16 to 18%, highlighting a wonderful business with a wide moat. Finally, we can look at the diluted EPS of the business, which has grown from 6.83 per share in 2013 to 28.03 per share in 2022. Balance sheet. The company has 62.87% assets to 37.13% in liabilities of the 134.65 billion euro in assets, with goodwill and intangible a combined 50.4 billion euro, 37.51% of the company's assets being in goodwill and intangible may be uncomfortable for some investors. Intangible assets are assets that don't take a physical form but still deliver value. In this group are assets like software, patents, copyrights, trademarks, trade secrets, and recipes. In the case of LVMH, the intangible assets would include its brand value for its maisons, such as Louis Vuitton, Dyer, Bulgari, Dom Perignon, to name a few. Goodwill is an intangible asset that is associated with the purchase of one company by another. It represents the value that can give the acquiring company a competitive advantage. This is essentially the business model of LVMH, where they use their enormous profits and free cash flow to purchase other luxury brands. Hence, the higher percent of intangible and goodwill assets in their balance sheet. Whilst increasing its revenue, it is also worth noting that the company's long-term debt has increased recently over the last 10 years from 4 billion euro to 24 billion euro. This increase in debt could be accounted for the recent acquisitions the company has made and would require to look into further. As the company had steady growth in profits over the last 10 years, this has been reflected on the shareholder equity in the company. Shareholder equity is one measurement of how strong the company's balance sheet is. The value represents the net dollar amount of all the company's assets and liabilities. Comparing to 10 years ago in 2013, if all the assets of the company was liquidated and the liabilities paid off, the shareholders would receive 26.7 billion compared to 55.17 billion euro in 2022. Finally, looking at cash flow statement. In the cash flow statement, we are going to analyze the operating cash flow in the cash flow statement. Operating cash flows because it tells investors how much money the company is producing or losing from its core operations. What as investors we like to see is operating cash flow increasing, because it tells investors how much money the company is producing or losing from its core operations. In this case, it shows that the world has an appetite for the luxury market, especially since the pandemic and with the world seemingly increasing in wealth. A larger portion of LVMH's growth is likely to come from China and other emerging markets in the future. Cash from investing activities gives investors an idea how much the company has been spending on its investing activities. In the case of LVMH, this can be correlated to investing in property and plant and acquiring companies. As the company is spending money for this activity, this cash flow is negative. The SEC filing will show exactly the company has been spending money. Next, we are going to look at one of the most important metrics in investing: free cash flow. It is the amount of cash the company is producing. Companies use their free cash flow to either reward shareholders or invest in more growth. LVMH's incredible shareholder value can be seen in the FCF in 2013 at €2.8 billion to €12.7 billion in 2022. Big 5 metric. Finally, we are going to look at the Big 5 metric as recommended by Phil Town. For those who hasn't read the book yet, I will highly recommend it, and you can find the link in the bio. Starting with the return on invested capital. ROIC is return on invested capital, the single most important number to tell you if a business is being run well or not. The number should be equal to or greater than 10% per year. But the real key is seeing if the ROIC number is going up over time. We can see that LVMH has had ROIC of above 20% in the last 2 years and has an average of 14% over the last 10 years. Equity growth. This calculates the rate a company has grown its equity or book value per share. The company has had exceptional equity growth rate in the last 2 years. Over the 10 years, it is still a respectable 8% return. EPS growth rate. EPS is one of the Big 5 numbers required to determine whether a company is a wonderful business. At an average growth of 22% over the last 10 years, this reaffirms LVMH as a wonderful business. Sales or revenue growth rate. The sales growth rate of a business is the rate at which it is growing its sales year over year. In this case, we are going to determine if people have been buying LVMH products year on year, and we have exceptional growth rate in the last 2 years. However, this may be because of the COVID pandemic stimulus checks and people not spending any money. Free cash flow growth. Free cash flow is the cash left over after a company pays for its operating expenses, OPEX, and capital expenditures, CAPEX. This is the money that the company is left with which it can pay dividends or use for acquisitions. FCF has been low in 2022 in comparison to 2021, but overall it is a 19% average in 10 years. What is the fair value for LVMH? Finally, no business is worth an infinite amount of money, no matter how wonderful the business is. This is where we are going to do a discounted cash flow analysis. Calculating a DCF is not straightforward. There are more than a few choices to be made, and it can be very complex. You need to answer quite a few questions that it is difficult to have accurate answers for. How long will earnings grow? How fast will they grow? When will its earnings end? What is the risk-free rate of return? What is the company's weighted average cost of capital? The key thing to remember is that valuing the company is art rather than science. I'm going to use the free cash flow to make an analysis to calculate the fair value of LVMH. I am using Stock Unlock's DCF feature to calculate this. This is an excellent website for anyone looking to analyze stocks. I am looking to project this company for 10 years, and the company has been growing free cash flow at 15% over the last 10 years, slightly different to what I got from my calculation. Regardless, we need to insert a future growth rate of LVMH for the next 10 years. This is where you will need to take the macroeconomic factors such as recession and interest rate into account. I am going to assume that the company will have a FCF of 10% over the next 10 years. Next, the shares outstanding growth rate I am going to leave at 0.04%. This means that the company is buying back shares. The company has been trading at 26.53 price to earnings ratio for the last 10 years. Here we have to make an assumption on if you think the company will trade at a higher or a lower multiple. I am going to make a conservative assumption of 23. Finally, we need to assign a discount rate for the company. The discount rate is also known as the rate of return you want to achieve from the investment. Higher the discount rate you apply, higher the margin of safety you are assigning to that investment. I am assigning a discount rate of 10% for the company. Based on these assumptions, this gives us a fair value of the company at €480.00, and the stock is currently trading at 662. This doesn't mean the company is overvalued. Based on my current conservative estimates, LVMH does appear to be overvalued. I hope you enjoyed the analysis of LVMH, and please comment for any suggestions and improvements.